Hey folks, good afternoon, good evening, and welcome to the next episode in our series Market Outlook for next week. So, this week, before we jump into what the market has in store for us for next week, we take a look at our performance report. So, we've just completed 2 months in our journey. And so we take this opportunity to share our performance report with you all. So as you know, we've been suggesting stocks under three main buckets, and our long-term basket of stocks, there are 20 of them there, have generated 12.15% returns in these 2 months as compared to the Nifty, which has generated 6.7%. So we are outperforming the Nifty in this front. Even in our stock of the month section, so where we provide one stock which we are bullish on from a medium term perspective. So one stock every month. So we have recommended three stocks, the recent one being one from the outperforming mid cap and small cap space, which we recommended just 2 days back. So we are not counting that yet. But the other two, which was one from the first one was from the FMCG space, and the second one was from the auto space. They are all up both by around 10%. One is up 9.5%, the other is up 10.5 or something like that. So yeah, so both again are outperforming the Nifty by some margin. And our Momentumizer section, this has been the most profitable for our subscribers. So we have recommended 25 stocks in this section. So Momentumizer is basically our short-term calls. So where we have in this, we have recommended 25 stocks. And of these, we have closed 15 positions, of which only 2 of them have been in losses. And the losses are in the range of 6 to 7%. And 4 of them are almost break even, like 0 to 2%. While 6 positions have generated profits in the range of 5 to 15%, while 3 are while 3 have been closed with gains of more than 15%. And we have 10 open positions, and all of these current open positions are in profits with gains of some of them with gains of more than 10%. So if you are interested going by our performance, to subscribe to any of our plans, you can visit our subscriptions plans page and check out the details. And this is the screenshot from of our Momentumizer's closed positions, where we can see that which are the stocks that we have recommended and how much they have generated. So as you can see, HBL Power and Ahluwalia Construction were the 2 stocks which ended in the red, while Wabag, Man Industries, and Elecon are the stocks which have generated more than 15% returns, generated 15 to 20% returns. Okay. So that's all we had to share. We are very happy with our performance over the 2 months. So definitely we wanted to share this with you. And now we move on to the normal routine of looking at the Nifty and the sectors. So as you can see, over the last week, Nifty remained more or less flat. It traded in a very narrow range, ending the week with just 0.2% gains. And as you can see, it did not get much support from the IT and the bank, which are its major pillars, along with Reliance, which is part of the oil and gas segment here. So Reliance actually ended in the red. So these 3 main pillars did not help the Nifty, and hence Nifty couldn't, just ended flat. The other sectors, of course, did pretty good. Like as you can see, realty, pharma, healthcare, consumer durables, other sectors which did pretty good, and the mid caps and the small caps are continuing to outperform. Within this basket, pockets like IT small cap, they have been rank outperformers over the past few weeks. Media and entertainment, bearings, hospitals, innerwear companies, insurance companies, and defense are some of the sectors where outperformance was, visible. So futures, Nifty futures, as you can see, there was net long unwinding for the week, but not by much. It's just 2%. So as you can see, the week started with around 1.03 lakh open interest, but it ended with just about 1 lakh of open interest. So it closed, I mean, the long unwinding was to the tune of around 2 to 3%. So during the 2 weeks, that is not very significant. I mean, it's mainly some impatient longs or weak longs getting out of the system, which is not abnormal. Moving on. This is the options chain. And as you can see, the chain is very tight this time. So on the put side, 18,500 is where the maximum open interest is. And this is the same strike where the maximum open interest has got added on the first week of the weekly series, that was Friday. And similarly, on the call side, it's the 18,600 levels, which has the maximum open interest along with the maximum OI that got added as well. So, from this, options chain, the reading is that, since these are, what should I say, these strikes are trading in the range of 50 to 55 and 65 points. So we can say that, the overall range, which is 18,450, so 50 points below 18,500 and 65 points above 18,600, which is, so the overall reading of the range is 18,450 to 18,665 odd. So this is what the options chain is telling us. So let's look at the charts now. Yeah. So we start by looking at the Nifty chart, and as you can see, Nifty traded in a very narrow band. I think 464 was the low for the week, while 662 was the high for the week. These two lines, both these two lines were drawn. If you see our previous week video, you will see these two lines drawn on the Nifty chart then as well. So which basically means that the range that we had anticipated, last week, Nifty, complied absolutely, by 100% to that range. So basically what it means is the big move will now come once these two levels, either of these levels break. So what can happen is, the next week we have the RBI policy. And over the weekend, like yesterday night, the US jobs data came in, and it was mixed. So which basically gave hope to the market participants that the Fed will go for a pause. It will not raise hike rates in its coming meeting. The Fed also has its meetings in middle of June, I think 13th or 14th of June. So market participants in the US are expecting that the Fed will go with a pause this time based on the data, jobs data. And so Dow made very good returns. Gave very good, gave a great rally on Friday, which is actually hinting at the SGX or Nifty also giving a 70 or 80 point gap up for Monday. So we don't know whether it will happen or not, but even if it does, If it's even a 100-point gap up, it's still below this range of 665. So we'll see. I mean, what happens after that? It can stay within the range or buoyed by sentiment. It can actually break and touch these 800 levels, and then once it crosses that, of course, the new highs will be taken out. That can happen, or what can also happen is, I mean, Nifty can stay within that range for a longer period of time till at least both the RBI policy and the Fed policy are done and dusted. So RBI policies this week, they'll announce their policy, the monetary policy on Thursday during market hours, of course. So we'll see what market does, how market reacts to these two events. My guess is once these two events are out, we'll get a more, trending move on the Nifty. It can be either up. I mean, if it's if it actually goes up, if it breaks this level, goes up, it will definitely this time cross this highs of 18,800 or 18,888 was the previous high. So, and then possibly even touch 19,000, and then we'll see whether they whether further movement is there, or there is a correction which comes up. A lot of people are also hinting at a correction, but as long as this 18,450 holds, I personally don't see any bearishness, and I mean, I will stick to my bullish views and continue with with taking positions in small cap and mid cap stocks, and get some income from that. So that's about the Nifty. What about the Bank Nifty? So Bank Nifty did manage to break into new highs, but after that it came back again and is now again back in its previous zone. So it's finding support at this 43,700 level, which is basically the midpoint of the CPR. And yeah, so we'll see. I mean, I'm sure within before the RBI policy is done with, the Bank Nifty is not going to do much. So once the RBI policy is over, then Bank Nifty will possibly make some move, and that will again, drag the Nifty one way or the other. But Nifty can get managed by Nifty IT and Reliance as well. So my anticipation is that Nifty will finally make a move post both the decisions are out of the way, both the RBI and the Fed decisions are out of the way, while Bank Nifty might make an earlier move based on RBI policy. Nifty IT has done a lot of hard work. So if you go by the daily chart, you can see that it's actually making higher highs now. For the week, though, it traded very flat. I mean, it did not do much, but Nifty IT, this index is mainly from the larger IT companies. But the actual action is being seen in the small cap IT companies, where we are seeing a lot of companies giving good breakouts and good returns. So the larger IT companies are not moving that much, and they also ended flat for the week. But now the more difficult work for Nifty IT, is on the way. So Nifty, this entire zone has to be crossed till 31,350 for. So once it crosses that, then only we can say that Nifty IT can take over from Bank Nifty as the index which is going to lead the Nifty. So till that time, so a much more hard work from Nifty IT is needed, to break out from this, more than 1 year zone, more than 1 year, trading range. Let's see where Reliance is. This is a weekly chart of Reliance, and as you can see, Reliance underperformed. And I mean, because Reliance fell this week, Nifty could not make much of a headway, and it actually, ended flat as well. So, like I have been telling for the past few weeks, that for Nifty to move up and cross 19,000, all these three pillars, Bank Nifty, the Nifty IT, and the Reliance, has to perform in unison. They have to, all three have to perform well, and that will only help Nifty to cross 19,000. So till these three, I mean, if these three continue to underperform, it will be difficult, more and more difficult for Nifty to cross the 19,000 levels. So I guess that's all for the from the charts. Let's move back to our PPT and see where we are. So I guess we are more or less there. We just want to make this announcement as well. We've been making this announcement over the last few weeks as well. I just want to remind all of you that we are starting our first batch of options training program next weekend. It will be most likely on the 10th or the 11th of June, the first day, and subsequent days it will be done on weekends only. So yeah, it's designed for professionals, working professionals. So we will we'll do the classes, the live webinars during the weekends only. As we have told earlier, so this is a 3-month program, but the first month will be spent in understanding the concepts and strategies, and the next 2 months will be more of a practical live market experience, where I'll be sharing my the Nifty monthly option strategy, which has given me one of the highest returns over the last 1 year. And this is who we are. Please visit our website, goforstocks.com. Read our blogs regularly. We do, write about where the market is going, where the market is headed in our weekly blogs, and in our Telegram channel. If you want to subscribe, we provide, in some cases, more daily updates. So you can subscribe to our fortnightly newsletter, visiting our contact section. And before we end, these are the disclaimers that we have to go through. Investment in securities market are subject to market risks. Read all related documents carefully before investing. Securities quoted are for illustration only and not recommendatory. Registration granted by SEBI in no way guarantee performance of the intermediary or provide any assurance of returns to investors, and past performance is definitely not an indicator or guarantee of future returns. So with that, I come to the end of today's video. Have the good day, all of you, and stay safe. Bye.